Nvidia has been winning the race so far, so have its customers and suppliers, Dell Technologies, Supermicro Computer, Taiwan's Semiconductor Manufacturing, and SK Hynix. This hype was based on the premise that AI is expensive since it requires a lot of computing power. But ever since DeepSeek dropped, announcing it can build AI models on par with OpenAI at a fraction of the cost, their stock prices tumbled. Nvidia was down 13%. Until now, AI has been defined more by largesse than finesse. In fact, DeepSeek could spark a value shift from hardware to software. DeepSeek's efficiency in utilizing fewer computational resources for comparable performance means that the cost of training and running agent AI systems will very likely drop going forward. If DeepSeek's cost-saving methods can be replicated, more companies will benefit from it. Salesforce is making a push to integrate AI that will automate its existing business software. If I can replicate what DeepSeek has done, Salesforce's expense for these AI features would drop significantly. But the company is just getting started with its AI automating agents that can take a simple command and carry out a complex task from it. ServiceNow, early leader in cloud-based IT services. They have the potential for a large agent deployment within their customer base. ServiceNow shares were down 10% this week through Thursday following disappointing earnings, presenting a more compelling entry point for the stock. HubSpot is another stock likely to benefit from lower costs for automation. HubSpot is innovating heavily with AI and has been doing so from an early stage. What would these software companies do with a more favorable cost structure? The real winners are those that can now take advantage of permeating AI throughout the product in a way that would have been cost-prohibitive before. Microsoft sits in the center of this new dynamic. It has a large AI cloud business, renting AI accelerators to OpenAI and others. If DeepSeek can be replicated, Microsoft could see less demand than it might have anticipated for new AI data centers, reducing cloud prices in the process. But Microsoft is still largely a software company. The centerpiece of its AI services is Microsoft 365 Copilot for Businesses, which costs $360 a year, more than its entire Office suite of apps. If Microsoft can charge a much lower price for Copilot, the service could see increased uptake and move more quickly to profitability. DeepSeek-type cost reductions promise a quicker rollout of AI services across the economy. DeepSeek could be a catalyst for the type of shift that came to traditional computing beginning in the 1990s. Before then, the benefits of IT spending went to makers of personal computers and servers. But over time, computing became abundant, hardware margins thinned, and the benefits began to shift to developers of software.
After DeepSeek, the Mag 7 will bend, not break. Magnificent 7 worth $18 trillion in total market value. Were undercut this past week by a Chinese startup no one on Wall Street had heard of just days earlier. The new R1 artificial intelligence model from China's DeepSeek has comparable performance to some of the world's best models, and seemingly comes at a lower price to train and run in the cloud. AI labs in the US and allied countries are busy trying to replicate what DeepSeek did. If they can, it may signal the beginning of a new, much lower cost structure for AI, and this means more risk for the companies that are spending hundreds of billions on capital expenditures for new AI data centers. Amazon.com, Microsoft, Google parent Alphabet, and Meta platforms have spent $212 billion on CapEx over the past 12 months, up 45% from the year before. Apple may be the biggest winner in low-cost AI. The company has been criticized in recent years for its meager amount of AI spending. The company's reticence to spend could now prove prescient. Cook defended its more parsimonious AI strategy, saying Apple has taken a prudent approach to capital expenditures for a reason. In fact, when we look back to the dot-com bubble, 90% of companies invested big on IT was bankrupt. Maybe Apple was right to maintain and strengthen its core business, to be more of a consumer-oriented company. Amazon looks most vulnerable from the DeepSeek development. The ability to run models on local servers may reduce the profit margins of the cloud. Amazon will benefit from cheaper AI across its retail, e-commerce business, allowing for more personalization and better recommendations. But investors traditionally buy Amazon for its high growth and high margin cloud business. DeepSeek's suddenly efficient AI raised concerns that Nvidia's big advantage, its powerful Blackwell graphics processing units for AI training and inference, could become its main vulnerability if an AI chip shortage turns into a glut. Nvidia recently started shipping the GB200 NVL72 AI server system, which combines 72 Blackwell GPUs for unrivaled AI computing power. But investors are missing the big picture when it comes to Nvidia. In fact, greater efficiency in driving down the cost of AI is exactly what Nvidia wants, as it will encourage adoption and enable innovative applications. Technological advancements have improved the efficiency of resource use and reduced the cost of resource consumption. This has stimulated the growth of resource demand. The increase in demand may exceed the savings brought about by efficiency improvements, ultimately leading to an increase in total resource consumption. So, increases in a technology's efficiency tend to increase consumption rather than lower it. Tesla is no longer seen as a car company. Rather, it's viewed as an AI beneficiary, particularly as artificial intelligence moves out of the digital world and into the physical one. 2025 will be a year where investors will continue to appreciate and value these existing and nascent industries of embodied AI, where we believe Tesla has established a material competitive advantage. Tesla is mainly about applying AI, not building it. As costs to develop AI drop, there is a shift in value from those developing the foundational models to those building applications. Tesla spent $11.3 billion on plants and equipment and $4.5 billion on research and development. DeepSeek has the potential to drive those costs lower. Microsoft's cloud segment has been growing quickly, with revenue up 19% last quarter, but its business software unit is still the star, accounting for 42% of revenue and 53% of operating profit. The centerpiece of Microsoft's AI strategy for business software is Microsoft 365 Copilot, the $360 a year add onto Office apps like Word and Excel. Until now, the cost of those apps has been prohibitive for many. With a lower AI cost structure, Microsoft could reduce the price significantly, speed up adoption, and get to AI profit far more quickly. Alphabet's Google's cloud unit grew by 35% last quarter, and DeepSeek brings new risk for that unit. But ad-supported services are still 75% of its revenue, and these stand to benefit. Search can be enhanced with natural language queries, more relevant results, better AI summaries, and improved ad targeting. YouTube can serve up better video feeds and shorts, its TikTok competitor, and target ads more personally. Cheap AI is a benefit across all of Google's services. Meta is in a similar place, with most of its revenue from ads. It's unique within the Mag 7 in that it's spending a lot on AI data centers, but just for its own use, not to rent out in the cloud. It's a risk not having rental income to offset a potential overspend. But regardless of spending levels, Meta will be able to use less expensive AI to increase engagement and enhance ad targeting, and the balance is likely to work out well for the company.